Good morning, everyone, and thank you for joining us here today at BPC's J. Ronald Terwilliger Center for Housing Policy. My name is Kristen Clearfield. I'm a Senior Policy Analyst for Housing here at BPC. Since its founding in 2021, the Terwilliger Center has worked to advance the goal of a decent, safe, and affordable home for every American family. As we know, housing is so much more than shelter. It provides significant social and economic benefits. And we'll be honing in on those economic benefits today as we talk about housing supply and its impact on our nation's working families, their employers, and the economy more broadly. Our two-part program today will start with a presentation to discuss trends in home prices, housing construction, and labor market impacts. We'll follow that with a panel discussion of private sector experts who are also members of the Terwilliger Center's Executive Council on Housing Affordability, to talk about their insight on the supply shortage and affordable housing crisis. If you're watching us today, please submit any questions you have at any time. You can post them in the chat if you're watching on YouTube, or tweet them to @BPC_bipartisan. Now let me introduce our presenter. Edward Glaeser is the Fred and Eleanor Glimp Professor of Economics and the Chairman of the Department of Economics at Harvard University, where he has taught microeconomic theory and urban and public economics since the 90s. He's published dozens of papers on cities, economic growth, law, and economics. In particular, his work has focused on the determinants of city growth and the role of cities as centers of idea transmission. He received his PhD from the University of Chicago. It's such a pleasure to have you with us here today, Ed. I'll turn it over to you.
Thank you. It's such a pleasure to be here today. I agree very, very strongly that housing is a bipartisan issue, and it's a big problem facing America, and one that we should all care about for many of the reasons that the video just showed. I'd like to start with just reminding us what's happened in terms of housing prices over the last 30 years. First slide, please. So this is just standard S&P CoreLogic Case-Shiller data showing the rise in nominal housing prices since the late 1980s. And what you can see in our most extreme of the three data series that you're seeing is LA, which is a 10-fold increase in nominal prices over that time period. The nation in New York stand below it. And it isn't quite as extreme, but it really shows how owning a house went from being a basic commodity, a basic expectation of normal Americans, into something that's really affordable only by the privileged. Next, please, especially in coastal markets. This shows the inflation-corrected CPI, which quite understandably shows less of an extreme growth. You can see here really three periods going back to the 80s. You can see a boom in the 80s, a boom that was experienced by New York and a boom that was experienced by Los Angeles, but really not by our other three cities there, which are Dallas, Atlanta, and Phoenix. Then you come to the boom of the aughts, a much more extreme boom in Los Angeles, a slightly less extreme boom than Los Angeles in New York. But of course, during this period, Phoenix experienced its first big jag up, suggesting the spread of high housing costs, the spread of these housing booms to wider and wider swaths of America. Then finally, we get the latest increase in housing prices. And there you can see, even in Dallas, even in Phoenix, the prices are rising. Affordability is something which is becoming increasingly scarce as we go across the country. Next, please. I certainly believe very strongly that the ultimate culprit for this is a lack of supply. On this graph, I show along the horizontal axis the amount of new construction as measured by permits issued between 2000 and 2013 divided by the 2000 housing stock. Along the vertical axis, the y-axis, I show the difference between how much it costs to buy a house and how much it costs to build a house. So a number like 3 means it costs 3 times more to buy a house in San Francisco than it does to just build the physical structure. And what you can see from this graph is the places that build a lot aren't expensive, and the places that are expensive don't build a lot, right? It is not that there isn't demand for Austin, Texas during this time period, but Austin builds enormously. Las Vegas builds enormously. San Francisco doesn't, Los Angeles doesn't, and the people who pay for that lack of building are the ordinary consumers who are trying to buy themselves a home. Next slide, please. You can see this time series in Los Angeles. I mean, Los Angeles has had great weather and a relatively buzzing economy for many, many decades. But in the 50s and the 60s, the city built a lot, okay? Gradually starting in the 70s and then onward, the city's production declined. And the cost of that rising production, that declining production, is rising rents, rising costs of buying and rising rents. And you can see those rising rents in the line that's going straight up. Next, please. One thing which seems to make a difference is the size of the jurisdiction. Los Angeles is actually a pretty big place, and it still does build something. But the more that you go into America's bedroom suburbs, the more that you go into a world in which homeowners decide, and what they decide not to do is to allow more housing to be built. This comes from the work of Clémence Tricot, who looks at a French experiment of consolidation of jurisdictions. Not something we do in the United States, is to involuntarily smoosh together a bedroom suburb with a larger city. But what she shows is that when you bring those suburbs into the larger city, they start to build more housing. And that's what you're seeing in that graph. And so one problem of the US is we do have these very localized governments that see all of the downsides of building new homes. And after all, for the typical homeowner, cheaper housing isn't an upside, it's a downside. And they see few of the benefits. Larger jurisdictions understand that those homes can help the economy. Those homes can provide the people who don't have homes with some sort of access. Those homes provide business for construction firms. Next, please. Okay, I'm now going to turn to the larger macroeconomic cost of the closing of the metropolitan frontier. And by the closing of the metropolitan frontier, I mean this fact that throughout most of America's history, our cities enabled people to come in from outsiders, and they provided them with the opportunities to live because they didn't restrict housing, because they enabled the free market to deliver a great deal of relatively affordable housing, whether this was in New York in the 1920s or Los Angeles in the 1950s. The downside of this closing has been, I'm just going to run through 6 costs. 1, asset prices bubbles are more common when the supply of assets are fixed, and these bubbles can and have leveled the larger economy. This comes from the work of my work with Joe Jerko and Albert Says. Declining productivity in the construction sector. This is a new paper of mine that suggests that the restrictions on building also mean a lack of technological progress in construction. Labor doesn't move to places where it's more productive. This is Genong and Shoag on directed migration. We can't move to places with mild climates and lower carbon use. This is from my work with Matthew Kahn on the greenness of cities. The whole economy is stuck in less productive parts of America. This comes from Shea and Moretti's work on the spatial misallocation of the American economy. And finally, upward mobility is reduced, which creates more pressure for growth-killing redistributive policies. Next slide, please. Okay, so this is Atlanta. So Atlanta, during the great housing convulsion of the aughts, the green line shows what's happening to permits, right? A big boom bust cycle in building occurs. The dotted line, the orange line, shows what's happening in prices. Very little price fluctuation because the quantity is doing the work, because the permits are doing the work, because they just supply new housing when people want new housing. And consequently, we don't have these large-scale financial convulsions in places like Atlanta. Next slide, please. But in San Francisco, the two colors mean the same thing. Green is permits, orange is prices. In San Francisco, they're not building a lot in any case. And during the boom, they don't manage to build a lot more. What happens, of course, during the boom is the prices gyrate wildly. And it's just those price gyrations that lead to events like the financial meltdown of 2007. Next slide, please. Together with Leo D'Amico, Joe Jerko, Bill Kerr, and Giacomo Ponsetto, we've been looking at the changes in productivity in the construction sector. And this is one way of looking at it. So these are housing units started per employee in the housing construction sector. And you can see that there's a whole period after World War II in which the Levitts are building their vast projects outside of New York, outside of Philadelphia, in which construction is getting much more productive. Over the past 50 years, that's changed, and we've seen declining productivity. There's a very nice paper by Austin Goolsby and Chad Syverson documenting this using a number of different ways. We document this in a number of different ways, but there's really this inverted U where we used to get better at building homes, and now we've typically gotten worse. Next slide, please. We can also compare ourselves with cities around the globe. So this comes from Turner and Townsend data on costs in different parts of the world for building a 20-floor office building. We're just comparing the world's simple average with New York, San Francisco, LA, Chicago, and Houston, and then show some other comparable cities, Paris, Singapore, Johannesburg, and so forth. We're an expensive place to build, at least outside of Houston, right? Every other place, skyscrapers cost more. And the lineup of which American cities it's expensive to build in lines up pretty perfectly with how restrictive it is to build. So over there in the last column, you see the Wharton Residential Land Use Restrictiveness Index, which is a standard measure of how difficult it is to build. New York and San Francisco are very restrictive. Houston and Chicago are not, and they're much cheaper. And of course, it's not just that we're more cheap. It's not just that we're cheaper relative to developing world cities, but we're cheaper relative to Paris. Right? Well, sorry, we're more expensive relative to Paris. And this is also true in things like civil construction. It costs America vastly more to build things like subways than it does to build them in any other part of the world. Next slide, please. This paper argues that there is a link between the size of firms in the construction industry and the lack of productivity growth. That because of the fact that it is so difficult to build large-scale projects, we end up with very small-scale firms in the construction sector in the US. These firms are not able to reap economies of scale, and they're not able to have the right incentives to invest in the kind of research and development that causes technological progress. This just compares the distribution of employment shares across different size categories in new single-family housing, manufacturing, services, tradables, and non-tradables. New single-family housing looks completely unlike any of these other sectors, right? Where all of the rest of them are dominated by big firms, right? New construction is dominated by firms with less than 10 employees, okay? Just a very different type of industrial organization. Next, please. And we can show that the places that are more restrictive have smaller firms, which is what this is showing. Not just smaller firms in construction of buildings, but actually stronger across all types of construction, specialty trade contractors, heavy and civil engineering. The regulation shrinks the ability to manage large projects, to manage lots of different projects, and to reap economies of scale. Next, please. This I found absolutely fascinating. This is a long time series of the share of industry revenues that's being spent on research and development in manufacturing and elsewhere. I had always thought of manufacturing as being R&D intensive and construction as being less so. That certainly is true over the past 30 years, as you can see by these two graphs. Just compare the red with the blue. But back in the 60s and 70s, okay, construction actually did more. There was actually more R&D as a share of revenues in construction than there was in manufacturing. That's an amazing shift, and it's hard not to think that the small scale of projects, the small scale of firms that's created by the highly restrictive nature of land use regulation has played a role in making that happen. Next, please. Okay, so now I've tried to argue that these restrictions have made that the construction industry has become less productive. I'm now going to switch back to directed migration. Over on your left, you see the relationship between initial income per capita, this is just across states, and the average population growth between 1960 and 1980. What's happening over there is exactly what you would expect to see happen. The places that are richer, the states that are offering higher incomes, those are attracting more people. This is a story that's been going on throughout all of America's history, where farmers left the rocky landscape of New England to head to the Ohio River Valley, or they left the Oklahoma Dust Belt to seek their fortune in California, or they left their farms deep in the South before or just after World War II to find some kind of future in northern industrial cities. Right? We've always been a nation on the move. And we've moved to places where we can earn more money. But look over there on your right, you can see the relationship between population growth and income between 1990 and 2010. No relationship. One reason for this is housing costs. You're no longer getting a bargain by moving to a high-cost area because it's just so expensive to buy a home there. And the consequence is America as a whole becomes less productive. Next slide, please. Another consequence of this is that you used to see a very strong regional convergence, where places that started rich were getting poorer and places that were poor were getting rich. Partially that worked through out-migration from poor areas and in-migration into richer areas. That regional convergence has really stopped. And we have places that are sort of permanently stuck in poverty, in part because their residents just stay there. They don't move out, partially because they can live on their parents' homes in a declining region, and they don't have to find or rent an expensive place, which they would if they moved to a higher income part of America. Next, please. Many of the regulations that we've seen have been motivated by allegedly environmental concerns. I think in many cases, the impact of these regulations is exactly the opposite. This is from my work with Matthew Kahn on this. And here we show the environmental cost of an extra home. This environmental cost, it just comes from a carbon inventory, and we hold income and family size constant. But some parts of America are just intrinsically much greener than others. That's primarily overwhelmingly because of climate. And by far the greenest parts of America are Los Angeles, San Francisco, San Jose, and San Diego. These are the places which, if we really wanted to reduce our carbon footprint, we would be growing like crazy. But we're not growing like crazy there, in part because they are also the most regulated parts of America. From a narrow environmental perspective, I can understand how you look at a development and you say, we don't want to have it here. It doesn't look good. But environmentalists in California don't get to determine the overall amount of new construction in America. They just get to determine where it gets located. And if building gets turned off outside of San Francisco, it gets turned on outside of Houston. It gets turned on outside of Phoenix. And it goes to a place that is not endowed with a perfect Mediterranean climate like San Francisco, but instead is a place in which there is a fair amount of energy needed to cool and heat the homes during different parts of the year. Next slide, please. To me, at least, the most horrific aspect of this is this slide, right? This is what I thought prior to COVID was America's largest unsolved social problem. The fact that we've gone from having roughly 5% of prime age males, prime age is defined as being from 25 to 54, which is a definition I increasingly find offensive, as I was born in 1967. When I was born, 5% of prime age males were jobless. Over most of the last 15 years, 15% of prime age males have been jobless. And joblessness is a fate far worse than being a low-income earner for most men. If you look at almost every measure of dysfunction, be it misery, suicide, family breakups, opioid abuse, not having a job means not having a sense of purpose, not having a sense of social connection, and not working rates, joblessness rates are not at all spatially smooth. They're particularly located in America's eastern heartland, which is the epicenter of American economic dysfunction. One of the reasons why people stay there is they have access to low-cost housing there, and they don't have access to low-cost housing elsewhere. Next slide, please. This is a famous paper by Chiang Kai-shek and Enrico Moretti. Some of these results have been recently debated, but I'll just read from this. They find that these constraints lowered aggregate U.S. growth by 36% between 1964 and 2009. That's a very big number. So constraints on the ability to move across space. Next slide, please. And I want to end on this slide. So here I have put along the grouped cities by how much upward mobility they provide. This comes from my colleague Raj Shetty's data. He looks at kids born around 1980 and looks how well they end up 35 years later. These mobility measures particularly focus on people whose parents are at the 25th income percentile. What you can see is by far the most restrictive metropolitan areas in America are the ones that offer the most upward mobility, right? So these are exactly the type of places we would like to see poor kids moving to find some form of upward mobility, but they can't. They can't because it's too expensive to live there. They can't because the insiders who already live there have put up walls that have made it difficult to build the type of housing which would enable outsiders to come in. So I think this topic is one of the most central ones for America, right? And I really hope the panel that follows will be able to solve it. And it's a fundamental question of whether or not we're going to live in a country in which people can find opportunity wherever they want to, or where we're going to live in a world in which we just privilege insiders who can just say that no outsider is going to be able to find their dream in the same city where you live. So thank you very much for your time, and thank you for having this event.
Thank you so much for that presentation, Ed. You've certainly given the audience and our panelists a lot to think about and a lot to discuss. So I'm going to get right into the introduction of our panelists so we can get going. We have with us today first, Orphe Divounguy. Orphe is a senior economist on Zillow's economic research team, where he analyzes economic data to try and identify emerging trends in the housing market. In the past, his work focused on quantitative methods for evaluating the impact of economic policy. Orphe earned a doctorate in economics from England's University of Southampton. And Orphe is the founder of the Quantitative Research Group and also the co-host of the Everyday Economics podcast. And he also serves on the board of Housing Connector, a nonprofit dedicated to lowering barriers to housing. Thank you for being with us, Orphe.
Thanks for having me.
Next, we have Kristen Sawin, Vice President of Government and Corporate Affairs at Weyerhaeuser. Weyerhaeuser is the largest private forestland owner in the U.S. with over 10 million acres of timberland. Additionally, Weyerhaeuser is one of the largest lumber and wood product manufacturers in North America. Prior to Weyerhaeuser, Kristen was Environmental Policy Director for the Association of Washington Business, and she was responsible for land use policy on behalf of the business and home builder community. Thank you for being with us, Kristen.
Thank you.
And finally, we are also joined by Taylor Marr, Senior Housing Economist for Airbnb. He leads the company's housing research program and also works closely with the Airbnb Housing Council. Prior to joining Airbnb, Taylor was Deputy Chief Economist at Redfin. And before Redfin, Taylor worked at the University of Chicago's Center for Research and Security Prices. He holds an MA in International and Development Economics from HTW in Berlin, Germany, and a BS in Economics and Psychology from University of South Dakota. Taylor lives in Northern Virginia with his wife and 3 sons. Thank you for being with us as well, Taylor.
Thank you for having me.
All right, let's dive in. Okay, Kristen, I want to start with you. As one of the nation's largest owners and operators of timberlands, Weyerhaeuser has a connection to housing development, clearly, and to the construction of housing. Could you talk a bit more about how Weyerhaeuser is involved in housing development? And have you felt any of the shifts or challenges in the construction industry that Ed flagged in his presentation?
Yeah, thank you, Kristen. Absolutely. It was really refreshing to hear some of what we talk about anecdotally, but confirmed in the very excellent research and points that Professor Glaeser made. You know, it's been an interesting and wild ride for housing, and for those of us who are tied so much to the housing economy, because as you saw in the early 2000s, just huge price upswing. People couldn't build fast enough. People couldn't get permits fast enough, and then it all falls off that cliff. And it's just continued to be really bumpy in America since then. In our view, we're not addressing many of the just fundamental underlying considerations that would change some of the weaknesses. We've got, a lot of pricing signals that don't match. We have the permit writers and the land use developers are not really incented to make sure that zoning restrictions are appropriate. And folks are really just tied to being very place bound, which is not great for anybody who needs, like, we are very rural based. We don't see a lot of migration to rural areas because there's no housing. There's also a lot of constraints associated with labor. We see real swings in pricing in housing because labor availability is almost as cyclical as housing availability, and we're not doing anything specifically to address some of those labor shortages as well. And that just wreaks havoc a little bit on pricing. It's interesting right now with the very high mortgage rates that's suppressing demand, but once those kind of come off the economy, you're going to see something pretty similar with really high housing costs again. You're going to see high prices again because we haven't fundamentally addressed any of the supply challenges.
Absolutely. Thank you for that. And we're certainly going to touch on migration later as well. But I want to talk about labor, which is something else that you mentioned. And for that, I'm going to turn to Taylor. Before your current role at Airbnb, you were at Redfin, where you analyzed housing market trends. So given your experience at Airbnb and Redfin, we're curious to hear how you think housing costs are influencing the ability of employers to recruit and retrain that labor, that diverse workforce.
Yeah, certainly. So as housing costs have risen, as Ed Glaeser brilliantly pointed out, that cities aren't building enough supply ultimately. That's pushing up housing costs. And when housing costs increase, for the same family to be able to afford to have access to their jobs, they have to move further from the city center to afford the same cost of housing. And that diminishes what jobs they can get, but it also impacts companies and the pool of labor that they can access as people are pushed further from the city center and ultimately often out of their labor force. And so minorities, by education, income, and race, and due to income inequality, will end up having less access to jobs. And we measured this in a partnership with the White House and Census Bureau years ago, creating an opportunity score to measure the actual pool of jobs that people had, depending on where they lived. And when housing costs rise, people got less access to high quality jobs. And so companies can react to this locally by reducing the number of days in office workers expected to be there. That can open up access to people who live further from the office. But then not just locally, but then across the country, the majority of the nation's lower and middle income minorities are in different cities than where a lot of these large successful companies are hiring from. And by opening up to hiring remote workers from any part of the country, they really open up the pool of talent from a more diverse workforce. So a company based in Seattle can hire a worker based in Atlanta. And this really changes the worker pool that they have options for. And this isn't just for racial minorities. In fact, one of the main contributors to the trend that Ed Glaeser pointed out about men, the increase in jobless rates of younger adults, especially, a lot of that is driven by increased disability. And during the pandemic, increased remote work actually opened up job opportunities for disabled workers. So the rate of those disabled workers that were working increased from 1 in 5 to 1 in 4, or 20% to 25%. This was just reported yesterday in Reuters due to remote work. So this just shows that the diverse workforce that companies can get can really open up due to remote work policies, and cities ultimately they need to build housing. Luckily, the places that have a lot of this diverse workforce are doing a better job at building housing in some of the southern metro areas where it's easier to build than some of the most successful expensive cities that are not building enough housing. So by opening up the talent pool, they really can serve to open up that diverse workforce.
Absolutely. Thank you for that. Orphe, I want to turn to you now. Outside of Zillow, as I mentioned, you're also the co-host of the podcast Everyday Economics, which I enjoy. And I listened to a recent episode where you talked about migration patterns in 2023, and sort of building on what Taylor was saying, households have been seeking out and moving to more affordable areas outside of those major metro areas. So we have a two-part question for you. Is this in line with what Ed discussed about the decline in migration to higher income areas, which is, what folks would have been doing for like the past 100 years up until recently? And if so, should we be worried about housing affordability in the destinations that people are now flocking to?
Yeah, so no, that's a great question. So look, people move to higher expected income, hopefully where they have better job prospects and lower housing costs, essentially more affordable housing markets. And so, when you look at the data, people are moving to the South. They're moving to Charlotte, Orlando, Raleigh, North Carolina, and Nashville, metros that have built a lot, right? So southern metros are building. A recent Zillow analysis of mover data showed that people are moving to markets that are on average $7,500 cheaper than where they come from. The fact that new construction has really picked up in some of these states, some of these areas, these markets, has really been supportive of these moves, right? And so that's kind of what we see generally in the data. And again, unfortunately, moving to areas where historically you haven't had a lot of mobility, a lot of upward mobility. Now, I guess there's some good news here is that some of these large firms are now moving to those areas as well. We've seen the explosive growth of a place like Austin, Texas, for example, where you're not seeing some of these firms moving to Austin. Places in North Carolina where you see a lot of these tech businesses also moving there. Some of the financial firms from New York going to Charlotte, North Carolina also. And so you're starting to see that shift occur. But again, I think most people forget that we're in the mess we're in terms of the inflation trouble that we found ourselves in. partly because we don't build a lot. Rent is 42% of core inflation. And in order for us to see inflation move lower, we're going to have to do something about the supply of housing. Without that increased sustained supply of housing, we're going to continue to see upward pressure on rents. I mean, we're seeing it already in the Zillow data. You look at the latest data, January last month, rent growth slowing in the multifamily sector because we have a ton of multifamily units under construction are coming on the market, a lot of apartments, but not so much in the single family sector. We're seeing a re-acceleration in rent in single family rents. And so really, really important that we address this issue in order to keep America growing.
Absolutely. Thank you, Orphe. And I want to stick with you for a moment because as you started to talk about as a senior economist at Zillow, I'm sure you've been trying to read the tea leaves and try to get a sense of where the housing market's headed this year. So what can we expect over the next 12 months if you're able to give any sort of prediction for the single family homeownership market and rental markets? And if you want to mention, how the Fed's recent decision about holding off on any rate changes has altered your predictions.
Yeah, I still think that this inflation is still very much on the way, but upside risk remains, right? So more supply is needed. The gap between demand and supply has been shrinking. We've had a lot of going back to housing. We've had a lot of new construction during the pandemic. We had a surge in new construction during the pandemic. But unfortunately, it's somewhat concentrated, right? It's not spread it's not, especially not in the places that are the most productive places around the country, where the firms are, where the businesses are. We saw most of that construction take place in the South. And so those are the markets now that where we're seeing, price growth really cool. And again, you look at rent growth, and rent growth still pretty high, especially in the single family sector in some of those markets, cooling faster in places that build a lot. And I think that's going to be the main concern. Getting inflation, so long as inflation continues to cool, continues to ease, we shouldn't see mortgage rates continue to increase, and we should start to see buyers and sellers kind of return in the housing market. But the flow of existing homes coming on the market has been relatively low when compared to before the pandemic. That's maintained price pressures in the housing market. And I think it's important to tie this all together by saying, basically, look, house price growth leads rents, asking rents, and owner's equivalent rent in the CPI, in the Consumer Price Index. And so unless we have that supply, that sustained increase in supply, my fear is that we're basically shooting ourselves in the foot. We're not going to see inflation return to the Fed's target as soon as the market was expecting.
Thank you for that, Orphe. Ed, I want to turn to you now because, as Orphe mentioned, many places that are booming economically have had policies that are restricting housing production. And as you've also shown in your research, that has in turn constrained further economic development. But have you seen any examples of communities that are both economically vibrant and are building housing at a pace to keep up with demand? In essence, is there anyone that's doing this right and attracting new business as a result? And what can we learn from that?
So there are two different answers that I can give you. One of which is, are there places that actually build a lot of housing where, there's plenty of economic productivity and it works reasonably well? Sure. Lots of them. And America has had even more throughout its history, right? I mean, New York in the 20s is one of my favorite examples, when in the early 1920s, New York was building 100,000 units a year, right? And it was remaining affordable to ordinary people. Still, throughout most of my life, the cities of the Sun Belt have been, fantastic. I mean, Dallas, Houston, Austin, until recent years, these have all been places that have accommodated new space. And consequently, to our shame, blue state Massachusetts has done a much worse job of providing affordable housing for ordinary human beings than red state Texas has. The number of metropolitan areas, though, that do this, the number of cities that do this, shrinks over time, right? And almost never do cities flip back. So over time, a city is doing well, it's becoming, people becoming entrenched, and they increasingly say no to new building. And you don't get out of that trap very often, right? We don't know how to flip a city back once it's become a not in my backyardist paradise. We don't know how to turn it into something else. We're trying. I mean, there are interesting policies around densification around public transit stops in Los Angeles, for example, that's been going on, which seems to have created some housing. There are interesting policies around assisted dwelling units in Seattle and Chicago, right? But these are relatively small things. And while I applaud them, it's not so clear that they're actually going to really deliver enough housing to make a difference. I think in some cases it's useful to look outside the US, because New York in the 1920s can feel pretty remote. And it's also probably true that we had too few controls on, let's say, construction of polluting factories near residential districts. But I think if you turn to East Asia, you turn to Japan, you turn to South Korea, you turn even to Singapore, you can see examples of modern cities that actually manage to build, despite managing to be places that are pretty beautiful as well. So I think there are examples, but they're getting fewer.
Thank you, Ed. Just a reminder to our online audience, please feel free to submit your questions via the live chat and YouTube, and we'll get to those in the final moments of our meeting here today. Taylor, I don't want to leave the conversation about migration and work without getting your perspective from Airbnb. Are you noticing people choosing more medium and long-term stays outside of major metro areas due to the rise in remote work? Does Airbnb have the ability to look at that? And if so, do we need to think differently about how we're addressing our housing supply gap and where that housing might be needed?
That's a great question. Yeah, we are seeing that at Airbnb since the pandemic. We've continued to see more people opt for longer term stays. We define that as staying more than 28 nights in a month. And that made up about 19% of all the nights booked. So it's growing during the pandemic. We are seeing people opt. In fact, I myself, just to share an anecdote, during the pandemic, make up a migration data point. I left Seattle and moved to Virginia. And when I moved to Virginia, I was able to stay in an Airbnb for a month as I was looking for housing, exploring neighborhoods and schools for my kids to attend. And, that flexibility of housing supply really opened up a great opportunity compared to, maybe staying in a small hotel room with my family. So that longer term stay is one way that it's even connecting to migration. And, even as I was waiting to close on a home, was able to do that as well. And so this flexible supply, it goes hand in hand with migration. And one of the ways of improving mobility across the country is opening up opportunities for people to go and explore a new area. It's one of the reasons that really holds people back from moving to unknown areas, even if they do offer great opportunity. And so the good news is that a lot of these cities that are, attractive for remote workers, like Montana, and a lot of people leaving these expensive coastal cities during the pandemic, they also are the ones that are opening up new supply and being creative about, reforming their zoning and getting ahead of this challenge. So, I'm encouraged by some of the progress happening there, but we're certainly seeing that also through Airbnb. And we've been partnering with cities that are trying to attract remote workers from Tulsa to Cape Town. There's more than 20 destinations around the world that have specifically partnered with Airbnb to attract remote workers and come alongside building housing in support of that growth as well.
Wow, that's fascinating. Thanks for sharing that. Okay, so now let's try to think a bit more positively. If we were able as a country to make substantial progress in housing production over the next 5 years, what benefits would that have for our economy? Apart from reducing housing costs, which we think would happen, how would greater housing supply tangibly improve people's lives? And I'm going to throw that out for anyone that has thoughts on that.
Yeah, I think we probably miss the fact that migrants tend to be younger, with their whole lives ahead of them, and highly skilled, wanting to work, wanting to contribute, and they're left behind. I thought Ed's slide about males, young men not working was extremely compelling. So it's very important. The group that will benefit the most are younger, because they're highly mobile, in search of better opportunities. And so, increasing housing supply, especially in those very productive markets, is going to disproportionately benefit young families looking for opportunities, and try to make it.
I agree very strongly with that. That it's the young who benefits, but it's also true that imagine allowing the housing supply in Silicon Valley to grow by 20%, right? What new innovations will be created because people can move to this center of American technological innovation, right? A whole set of things can come about if we just enable people to move to places where they are most productive, where they can follow their dreams. And you're going to enable businesses to pay lower wages for workers, because you don't have to compensate them for egregiously high housing prices. This will enable businesses to grow and to become more productive on global markets. Right? This is really we've been shooting ourselves in the foot by this in terms of the larger economy, and everything about our economy becomes more dynamic, fairer, and more innovative if we enable people to move to places where they want to move, rather than to places where they can just find a cheap house.
Yeah, and I would also add that, the final slide that Ed showed about the places of opportunity are the ones that are most restrictive in building housing. One of my most final research reports at Redfin before I left was about quantifying the price of these high opportunity neighborhoods. And when cities or neighborhoods even are not building enough housing supply, it keeps prices elevated. In fact, it was 38% more expensive in a high opportunity neighborhood than a low opportunity neighborhood for housing. And by building more housing, the tangible benefit is it opens up great opportunities for, living in a neighborhood with better schools, access to transit, better parks. Quality of life overall can be improved by adding supply where it's really needed the most for people to improve, economic mobility and overall just flourish. So even at the neighborhood level, that becomes really important.
I want to build on something Ed said about fairness. At Weyerhaeuser, we really believe that home ownership is a key factor in intergenerational wealth building. And we are really missing the opportunity with our youngest first-time home buyer community, and also just disadvantaged minority communities who've not had some access. And we are really missing the opportunity to address equitable distribution of wealth in the United States by not focusing appropriately on that first-time home builder and affordable housing stream, because people are getting aced out of some of those intergenerational wealth opportunities. And we'd like to see our country lean into that a bit more.
Can I just add to that? That is also incredibly right. And if you just compare the survey of consumer finances in 1983 with the same survey 30 years later, you see in 1983 there are actually a lot of people in their 30s and 40s who have non-trivial amounts of housing wealth. Flash forward 30 years, that's all gone, right? Younger Americans just are not having housing wealth. But look at the people who are over 65. Now they often have enormous amounts of housing wealth, right? And in some sense, there's been a giant intergenerational transfer of wealth, almost a piece of intergenerational theft, where the young have been expropriated and the old have benefited.
Thank you all for those comments. Ed, you mentioned innovation, and we're thinking about, how to increase supply of housing so that more folks can become homeowners, and, building that path from rental to home ownership. And Kristen, Weyerhaeuser is very concerned with sustainability and innovation in housing construction. And I saw that you recently announced a sustainable design and building challenge in partnership with Habitat for Humanity. Could you talk about this initiative and what Weyerhaeuser hopes to achieve?
Yeah, absolutely.
After you share that, I'm wondering, is it realistic for us as a housing industry to try to be both more sustainable and lower the cost of building housing so we can build more? Is that something that we can try, or do we have to choose one or the other?
Yeah, Weyerhaeuser's got a long partnership with Habitat for Humanity, and we really support and share their commitment to greater housing access and affordable quality housing. And so for the challenge, we partnered with 6 local affiliates, and we've asked them to really innovate around ways that they can use wood products to increase equitable access to affordable housing and promote sustainability and resiliency. So we're really looking for projects that include long-term resiliency from disasters. We want more efficient construction methods and processes, and processes which would eliminate some waste from the construction process. And those are some of the focus areas of the challenge. We also want to make sure that wood products are a part of the solution to building quality, affordable housing, because it is a low impact, low carbon impact, and resilient building material. So we're really interested in what the affiliates can come up with. And in choosing the 6 affiliates, Habitat's scale is over 1,000 affiliate locations. So if we can find something that works really well, then we could support increasing these innovations across their affiliate footprint, which is all kinds of communities across America. And we really also believe firmly that housing of all kinds can be built sustainably and for all income levels. We want to help to lead that paradigm shift with our partnership for Habitat, because we can have more housing options of all shapes and sizes, anchored in natural, renewable, and efficient building materials. And we think this partnership with Habitat can kind of unlock some of that.
Wonderful. Thank you for sharing. And we'll be watching to see how that design challenge.
We'll be telling people how it goes.
I'm sure. Okay, so we have about 10 minutes left. I have a few more questions for the group, and then we'll turn to our audience questions. I want to think about now how the private sector can be involved in our effort to build the supply of housing. And Taylor, Airbnb recently launched the Airbnb Housing Council, which is an advisory group of housing experts, which does include our executive director, Dennis Shea, who will help your company support initiatives to address the nationwide shortage of affordable homes. Does Airbnb have any preliminary ideas about how your company and the private sector more broadly, maybe folks listening, can work with governments to advance policies that would support the construction of additional housing?
Yeah, absolutely. And, let me just build off the last answer, because I love that was a, private partnership to innovate and create innovative solutions. And I think that's exactly what we have in mind, convening a council of experts, policy advisors, former mayors and current, and academics to all come together to research and figure out what are the most innovative solutions that we can work with cities on. So at its core, the Housing Council is just a group of advisors that are helping to shape advice, but also help us bolster our efforts to, work with cities on not only sensible regulations, but really encouraging broader construction of housing supply. So we're in a lot of conversations about what we can do as a private company as well to support that. Several different initiatives are coming out of that we're, getting feedback from the council on and discussing the specific partnerships that we can help create. But for example, Airbnb is donating, several $1 million to support efforts in California on approving local affordable housing bonds, allocating money towards from transit taxes, from occupancy taxes into local housing initiatives. So trying to help use funds that are generated by some of the economic benefits to supporting some of the housing construction, and ultimately trying to work with cities as we're having these conversations as to what they can do to best increase housing construction as well.
Thank you, Taylor. And that just leads me to wonder, I guess, more broadly, do you think that companies in corporate America should be playing a bigger role in helping to build public support and political will for housing development? And should they be more active in pushing a pro-housing agenda at the federal level, or even locally where their companies are operating?
I think we all should be leaning into it a little bit more. It is imperative for our workforces. First of all, it is something that we need to address more specifically in the United States because of the fairness issue. And, you know, and you mentioned somebody mentioned the Seattle experience last year, where there is actually an environmental group who has created the tag of YIMBYism, yes in my backyard, because the housing constraints are so acute here in Seattle it's been an interesting bedfellows, and the corporate world has a role to play in this. And it's okay that we're building things. It's okay that we're gonna add housing for our new employees, but we're gonna add the right kind of housing near parks, near schools, near transit. These are all things that we can and should do, and it shouldn't be quite as hard as it is.
And I think there's good news on that front, right? So at Zillow, we keep taking the pulse on consumer sentiment around housing supply, and roughly 80% of people surveyed said that adding more homes within their own community was actually critical to improve housing affordability. So people understand that. And I think people really started to understand during the pandemic, when, you know, some family members maybe were outbid in the housing market, couldn't get in the housing market, or some people were, you know, we talk about golden handcuffs, people locked into their homes because they have very low mortgage rates, and then they can't find a home to go to because it's going to be too expensive to move. And so I think a lot of people are starting to understand that this is important. This is something we need to do. You know, Ed also mentioned the Wharton Land Use Restriction Index. And so we did a very interesting exercise at Zillow where we tried to figure out how many homes were needed where. So trying to identify where the biggest housing unit deficits were. And you know, lo and behold, they're in the places that are the most restrictive. You know, they're in Los Angeles and, you know, San Jose and Riverside, California, other California metros. So I think taking the pulse on public opinion and making sure we're out there sharing that information with policymakers is absolutely important. Very crucial.
Thank
You know,
you.
I can add just to that one second. When I started working on this topic about 23 years ago. So it's been almost a quarter of a century since that I've been thinking about this stuff. And when I started working on it, like, it was a very cranky, nerdy subject. I mean, there was basically, you know, there were three kind of, you know, Chicago PhD economists who thought it was kind of interesting and important, and a couple of Berkeley economists, and, you know, really very little interest. And the fact that we now have a movement, which is the Yes in My Backyard movement, that's like a totally amazing thing. And it's really fantastic that it's getting more attention. It's critical that it does. And, you know, what I'm hearing on this just makes me feel better about the possibility of really making a difference going forward.
Well, thank you for that. Okay, so we are going to turn now to questions from our audience. We've had some great questions coming in here, so I'm just gonna look through these. I think you might have answered this, but just to be clear, we have a question. What are the political ramifications of increasing supply? And are people who are currently homeowners against increasing supply because it could reduce the price of their asset, their home? Anyone can take that, but maybe Ed, I want to.
Sure. You know, we are talking about making housing more affordable, and yes, there will be losers from that. And it certainly is one reason why affordability isn't a rallying cry for everyone, whereas everyone kind of likes it when gas becomes more affordable. People who own homes don't like it. That's certainly an issue. Oddly, there's a remarkable amount of sort of antipathy towards some types of zoning reform, even among renters, which is not something I fully understand. But I think I just want to tie the rope with what was said earlier. I think it is in general true that people understand that there needs to be more housing or are in favor of it, but it becomes much harder when a particular project or particular proposal is on the table, because all of a sudden it becomes very real, and it becomes much harder to generate actual political support for that. I tend to think one of the big issues that we have is that people are very bad at understanding how little this new project will change their lives, right? They're very afraid of change. They're very afraid of anything going wrong. They're worried about the extra traffic or whatever it is. And they underestimate the extent to which, you know, their life's probably not going to be very changed, and the people who get to move into it will in fact have their lives changed, and likely to have them changed for the better. So the fight has to continue.
And I would add too that, you know, you can also add new housing in a neighborhood. By adding some smaller units, you have opened up more affordable opportunities for middle and lower income households to rent. While at the same time, if that's a result of upzoning and opening up opportunities for that multifamily development in a neighborhood, it also increased the value of your land. So you can have both in a lot of neighborhoods where the homeowner sees greater value from their land because of now what can be built. At the same time, developers can build more smaller units and more multifamily units. And we do see this open up opportunities for affordable housing. And, at the same time, too, just opening up more housing generally can also help reduce the rate of growth of rent. And if incomes are growing faster than rents, even if rents aren't declining or home values aren't declining, you can still see progress in people over time being able to have incomes outpace rent inflation.
Absolutely. Thank you for that.
And you see a lot of homeowners wanting to be able to subdivide their lots, right? So that if you look at support for some of these types of policies, yeah, so you may have people that don't want big apartment buildings in their backyard, but most Americans support modest densification. We're seeing it across our surveys that if you allow them to build an ADU or if a townhome is built in their neighborhood, they're perfectly in favor of that. And so it's the minority that is sometimes the loudest voice in the room, unfortunately. But the majority of Americans have come to realize that building more is going to be important for improving affordability across the board for everyone.
Thank you, Orphe. Looks like we have time for one more question. And because we are the Bipartisan Policy Center, we do a lot of work with the federal government, and we do believe that the federal government has a role to play in improving the supply of housing. But are there any specific ways you want to share that the government could incentivize the production of affordable housing and also support folks that are currently experiencing housing insecurity?
So I'm going to throw out an idea that I put in a New York Times op-ed a couple of years ago, if that's okay, on tying transportation spending to production of local housing. So the real battles over the rules are occurring in state houses, right? State houses have the ability to change the locality's abilities to do things, to encourage affordable dwelling units, to do all sorts of things, particularly in California. The U.S. government currently hands out a lot of transportation dollars, taken both from gas taxes and from general tax revenues, used for highways, used for all sorts of things. It seems that it's not necessarily constitutional if you just hand that out with the sole objective of changing what local rules are. Does not pass constitutional muster. But in fact, the benefits of transportation spending are going to be larger in those communities where building is possible, right? Because you can actually adjust to the new rules. So I think it's well within sort of constitutional muster to say that reflecting those benefits, we're going to tie some form of transportation spending to the ability to deliver the housing to take advantage of that. And ideally, that will give those state senators and representatives who want to reform housing a little bit more leverage in their arguments over why California should make it a little bit easier to build affordable housing for ordinary people.
One of the most interesting things about the last several years has been to watch the uptick and uptake of some of the cleaner energy options in solar, wind, some of those because of incentivized funding from the federal government. I think we could be a little bit more creative in the use of the tax code to drive policy choices that we would like to see made. We're big supporters of the low-income housing tax credit, but it's just one thing that could be done. And I think part of the challenge is always on the entitlements, the buildable land, the lot development, that a targeted package aimed at creating more of those things at the local level might send the right signal to local governments about how to prioritize that type of activity.
Thank you so much. It's hard to stop this conversation, but that is all the time we have. So thank you so much for joining us. Thank you to our wonderful panelists and presenter. If you enjoyed this event, please go to our website and check out our work, bpcdc.org/housing. You can also find information about our annual Housing Summit, which we're hosting on June 11th this year in Washington, D.C. So with that, thank you so much to our audience and speakers for tuning in. Have a wonderful day.
Thank you.
Thank you.
Thank you.
Thank you.